Welcome back to today's final morning report chart appraisal on Friday the 5th of Feb with me, which pre-market analyst at Handtech Markets on non-farm payrolls Friday. Looking at gold, and we're still running this gold chart higher, aren't we? This incredible move that we've seen in the last sort of few weeks just continues to run higher. It's through that resistance at 1142, which is an old floor. It seems to be now breaking through the resistance at 1156. Seems to be doing that as well. Yesterday's high 1157.20. If it continues to move through that, then you're looking probably back at these highs of October, aren't you? These 1182.50 to 1187. No, sorry, 1190. So yeah, incredible strong run higher. The interesting thing now is we've got the momentum into overbought position above 70. Last time we saw that was back in Q1 2015 with that strong run higher too. Well, $13. But at the moment, you would argue that, well, there are two different ways of looking at RSI above 70. There's obviously the prospect that you're playing just a range trade, arguably, and it sort of starts to retrace, or you're trading a strong run, strong bull run, and it tends to sort of sit overbought for a while. Now, the thing I would start to consider is that I sort of brought this up in my morning report today. Now, this is the Bollinger Bands. Now, you can see here the run higher in August started to see the trading through the top of the Bollinger Bands. Similar sort of situation in October. We're now in that position again. Gold doesn't tend to run higher through the top Bollinger Band for very long before you start to get a correction. And that is what is leaving me a little bit reticent to chase this too far higher. Now, what I would say is that you'd be looking out for the sort of momentum indicators, possibly on the hourly chart, to give you signals. Now, you're seeing just a bit of consolidation at the moment in the last few hours, as this sort of run higher just comes up against non-farm payrolls. Payrolls, by the way, is a very volatile event for gold as well, because of its volatility that drives through gold, through the dollar. So be mindful of that. I would say that you've got the support that starts to come in properly around about 1145 area, and then down to 1137. Sort of this old support from the last couple of days. You would also be looking out for the RSI on the hourly as well. Obviously, we've seen the run higher picking up off 42 or the mid 40s throughout this move. Seems to be a decent area. Now, if you started to see it pulling back below 40, then you could start to think that maybe this is a proper correction coming back in, and be mindful of that. And I would stay quite close with your stop losses, because I think that, or stop losses, profit triggers, or because I'm just a little bit concerned about how strong this run is, and gold is I think, still in a long-term bear market. I think this is a rally within the bear market, and I think that ultimately it's going to probably start to fall away again. I'm not thinking that this is the beginning of a massive bull run recovery on gold. I might be wrong, but I think at the moment there's nothing really that suggests that it is. So I would say that just be mindful of that, and the fact that we're overbought. But at the moment it still looks pretty strong, doesn't it? It's still pretty positive, so I wouldn't necessarily close out positions. I would say stick quite close to profit triggers. So I wish you good luck in your trading on gold today in front of payrolls, and I will speak to you later. Thank you.